Welcome back to Bonnie's Life, your go-to channel for insightful analysis on the ever-evolving crypto market. I'm your host, Bonnie, here to navigate you through the twists and turns of the past week's cryptocurrency performance. Buckle up, because it's been a roller coaster ride. Over the past 7 days, the crypto market has experienced notable fluctuations, influenced by a blend of technical patterns and fundamental developments. Let's dive into the specifics. Starting with Bitcoin, BTC, our market leader. After reaching an intraday high of $84,705, Bitcoin faced a slight correction, currently trading around $82,819. This 0.685% dip from the previous close suggests a consolidation phase. Ethereum, ETH, mirrored Bitcoin's movements, hitting a high of $1,950 before settling at $1,895, marking a 0.893% decrease. Such parallel trends highlight the strong correlation between major cryptocurrencies. Other significant players like Cardano, ADA, XRP, and Solana, SOL, also saw declines of 2.227%, 2.991%, and 3.405% respectively. These movements underscore the market's sensitivity to broader economic factors. But from a technical standpoint, Bitcoin's recent price action has formed a bear flag pattern, a bearish continuation signal suggesting potential further declines. Analysts caution that without strong support, Bitcoin could test the $73,000 level. Now, let's shift to the fundamental factors influencing these trends. The crypto market doesn't exist in a vacuum. It's affected by global events and policies. Recent U.S. tariff policies have injected uncertainty into global markets. President Trump's implementation of 25% tariffs on Canada and Mexico, alongside increased levies on China, has dampened risk appetite, leading to a 9% drop in Bitcoin on the announcement day. Additionally, the U.S. dollar index, DXY, has shown bullish momentum, indicating a stronger dollar. Since cryptocurrencies often trade inversely to the dollar, this strength has exerted downward pressure on crypto prices. On a brighter note, the U.S. Senate Banking Committee's approval of digital assets legislation marks a significant step toward regulatory clarity. This bipartisan effort aims to establish a framework for stable coins, potentially fostering institutional adoption and long-term market stability. Institutional interest remains robust, as evidenced by the $274.6 million net inflows into U.S. spot Bitcoin ETFs, the largest since early February. Fidelity's FBTC led with $127.3 million, signaling renewed confidence among institutional investors. However, it's essential to approach the market with caution. While institutional inflows are encouraging, the broader economic environment, including trade tensions and inflation concerns, continues to contribute to volatility. In this second segment, we provide you a comprehensive guide to inform your trading decisions. First, technical analysis. Bitcoin, BTC. Current status, trading around $82,824, reflecting a 0.758% decrease from the previous close. Key indicators, Parakba support levels. Analysts identify weak support around $73,000, suggesting potential for further declines. Resistance levels. Strong resistance observed near $87,000 and $98,500. Patterns. Formation of a bear flag pattern, indicates a bearish continuation, warranting caution. Ethereum, ETH. Current status, trading at approximately $1,897.05, a 0.738% decrease from the previous close. Key indicators: paragraph support levels, critical support at $1,861. Failure to maintain could lead to further declines. Paragraph resistance levels, immediate resistance at $2,000. Surpassing this could signal bullish momentum. Paragraph indicators, check-in money flow, CMF, suggest rising buying pressure hinting at potential recovery. Cardano, ADA, XRP, and Solana, SOL. Current status, paragraph a day, trading at $0.704778, down 2.421%. XRP, trading at $2.27, down 2.575%. POFSOL, trading at $124.36, down 3.56%. Key indicators, support and resistance, monitor key psychological levels and recent lows for potential support. Recent highs may act as resistance. Market sentiment, increased volatility suggests cautious trading. Consider setting tight stop-loss orders. Second fundamental analysis, global economic policies, U.S. tariff policies. Recent U.S. tariff implementations have heightened market uncertainty, leading to reduced risk appetite and contributing to cryptocurrency sell-offs. Regulatory developments, U.S. strategic Bitcoin reserve. President Trump's executive order to establish a Bitcoin reserve has introduced volatility, with initial optimism followed by market corrections. Institutional investment, ETF inflows. U.S. spot Bitcoin ETFs have seen net inflows totaling $274.6 million, indicating renewed institutional interest. Third, risk management strategies. Diversification, avoid overexposure to a single asset, diversify across various cryptocurrencies to mitigate risk. Position sizing, limit individual trade sizes to a small percentage of your total portfolio to manage potential losses. Stop-loss orders, implement stop-loss orders to automatically exit positions at predetermined loss thresholds, protecting against unexpected market movements. 4. Staying informed. Continuous education. Regularly update your knowledge on technical patterns and market indicators. Market news. Stay abreast of global economic events, regulatory changes, and institutional activities that could impact the crypto market. Always follow Bonnie News Network for in-depth, informed, and unbiased news for decision makers and traders. Community engagement. Participate in crypto forums and follow reputable analysts to gain diverse market perspectives. In conclusion, the past week in crypto has been a testament to the market's dynamic nature. Technical patterns and global events have intertwined, creating both challenges and opportunities for traders and investors alike. By integrating thorough technical analysis with an understanding of fundamental factors, and by employing robust risk management practices, traders can navigate the current crypto market landscape more effectively. In the last segment of this episode, we are going to discuss what is expected from the FOMC tomorrow regarding the U.S. interest rates. The Federal Open Market Committee, FOMC, is scheduled to announce its decision on U.S. interest rates on March 19, 2025. Current analysis and market data suggest that the FOMC will likely maintain the federal funds rate at its existing range of 4.25% to 4.50%. This expectation is influenced by several key factors. 1. Federal Reserve's recent stance. In its January 29, 2025 statement, the Federal Reserve opted to keep the target range for the federal funds rate steady at 4.25% to 4.50%. The committee emphasized a data-dependent approach, indicating that future rate decisions would be based on incoming economic information and the evolving outlook. Second, economic indicators. Inflation. Inflation has moderated from its peak of 7.2% in 2022 to 2.5% in January 2025. However, the introduction of new tariffs poses a risk of reversing this trend, potentially leading to higher consumer prices. Economic growth. Economists have revised down growth estimates, with some forecasting just 1% growth for the year. This slowdown is attributed to trade tensions and tariff policies impacting business investment and consumer spending. 3. Trade policies and tariffs. President Trump's recent tariff implementations have introduced significant uncertainty into the economic landscape. These measures have the dual effect of potentially increasing inflation while dampening economic growth, complicating the Federal Reserve's policy decisions. Fourth, market expectations. Investors anticipate that the Federal Reserve will maintain current interest rates in the upcoming meeting. However, there is an expectation of potential rate cuts later in the year if economic conditions deteriorate further. Fifth, Federal Reserve's communication. Federal Reserve Chair Jerome Powell has emphasized a cautious approach, highlighting the need to assess the cumulative effects of trade policies and other economic developments before making further rate adjustments. So, our general conclusion on all the above is that, given the current economic indicators, trade policy uncertainties, and the Federal Reserve's data-dependent stance, it is widely expected that the FOMC will hold interest rates steady at the forthcoming meeting. The committee is likely to continue monitoring economic developments closely to inform future policy decisions. Okay, now let me make this disclaimer. Cryptocurrency trading involves significant risk, and I'm not a financial advisor. Ensure you conduct comprehensive research and consult financial advisors before making investment decisions. Remember, in the world of crypto, staying informed is half the battle. If you found this analysis insightful, don't forget to like, subscribe, and hit that notification bell to stay updated with Bonus Life. Until next time, trade wisely and stay curious.